We are looking ahead to tech earnings. We're still dealing with a very volatile AI story, and I don't know if tech earnings are going to calm down our thinking on that front. What's ahead for you this trading day?
Yes, I think looking forward, I think the key thing is these Alphabet earnings after hours. Really kind of kicks off things for hyperscalers before things get a little bit busier next week. I think, my colleague Anthony Stevens flagged that one-day vol on hyperscaler earnings day is higher than it is on FOMC day. So this is a big deal for us to look out for. In terms of Google's earnings specifically, a lot of focus is going to be on the CapEx space. So we saw last month, they did that $80 billion equity raise, sent their shares lower. So obviously there's a high sensitivity to what we're hearing on CapEx. And, a lot of focus is also, on, how much they kind of thread the needle. We don't want to see too high a CapEx, as, it could be fears of overbuilding, and then an undershoot could potentially be, more of a detrimental story to the broader AI infrastructure story. At the same time, also need to see some evidence of monetization. Some signals on that haven't been relatively positive. We've seen delays to Gemini. We've seen top talent leaving. So those are the key things to watch. But more broadly, I think the trade is, if we do see a well-received report, what happens with tech as a whole? Heading into the second half, the chart I just kept seeing time and time again was the ratio of, semiconductors to hyperscalers. Do we see a bit of further rotation into that? If we see a hyperscaler positive beat, then also what happens with, value into growth?
UK inflation at a 15-month low right now on the back of the data that came out at 7 a.m. You've got that story. You've got the story of a prime minister who's clearly determined to drive prices lower, and yet the markets are pricing in 40 basis points of hikes by the BOE. Does that need to be rethought?
Yeah, so I think in terms of, the inflation report we saw this morning, that was a third consecutive downside surprise. It's about 50 basis points below where the Bank of England ultimately expect it to be. But obviously since then, we've seen the MOU between the US and Iran break down. As I walked on the set, energy prices are just continuing to ratchet higher. But ultimately, I think, today's data gives you a lower starting point for, when those energy prices keep going higher and higher. Bloomberg Economics thinks we'll probably get to about 3% on inflation, which for the Bank of England is relatively good news, like 3.5 to 4%. That's kind of their danger zone for where they see inflation. So to me, it does look a little bit stretched, particularly given the fact that, even at the peak of the crisis, the Bank of England were pretty reticent to be delivering rate hikes.
We're early in the earnings season, but so far so good. Are European earnings good enough, expected to be good enough to offset higher oil prices?
I mean, that definitely appears to be the case for now. Every time I walk in the office, I see energy prices higher. We've seen continued attacks overnight between US, Iran, and Euro stocks, 50 future is just resilient. So, it's a case of earnings are strong enough. They're expected to remain strong enough. In terms of the key sectors, it looks like energy, financials, and to a lesser extent, consumer staples. They're providing an offset. If we see negative tech today, then that's also a positive for the European equity complex.
Adam Linton from Bloomberg Markets Live team. Adam, thank you. You can get up-to-date analysis and insight from Adam and the rest of the team. Just go to MLIV, go on your terminal.